morning and Drshtikon to one and all. I, Jenny Paleja, on behalf of Team Drshtikon, would like to welcome you all to the 14th webinar of Drshtikon Talks. As you all are well aware, at Drshtikon, we have leading Bharatiya personalities who come and share their views and ideas with us. We would like you all to get the maximum value addition from these talks, and hence I would request you all to keep your mic on mute and turn off your videos so that there is no distraction while the speaker is talking. Any questions you may have can be typed into the chat box and they will be answered towards the end of the webinar. In case there are any queries left unanswered, we assure you that we shall respond to those by email after the webinar. If you have any further feedback or suggestions, you can convey them to us by email at drshtikon.talks@gmail.com. Our speaker for today is Shri Jaideep Hansraj from Mumbai. I request Ayushi Saraya to introduce our speaker to you. Over to you, Ayushi.
Thank you, Jenny. Good morning, everybody. It's a great pleasure to introduce our speaker for today, Mr. Jaideep Hansraj, Managing Director and CEO of Kotak Securities Limited. With over 30 years of experience in financial market across various categories, Mr. Jaideep brings with him a strong domain in investments and capital markets. He also excels in providing cutting-edge, customized financial products for clients to aid their long-term wealth preservation and growth. He has been associated with the Kotak Mahindra Group from July 1993. In a short span of 4 years, he has elevated as the Chief Executive of Kotak Mahindra International Limited in Dubai. In 1999, Mr. Jaideep took over as the head of Kotak Securities Private Limited. And in 2004, he assumed charge as head of Kotak Wealth Management. Under his able leadership, Kotak Wealth Management emerged as a leading wealth management firm. In his current capacity as MD and CEO of Kotak Securities, Mr. Jaideep strongly believes that digital is the way forward, and he is making significant contribution in positioning Kotak Securities as a digital-first organization. Mr. Jaideep is also a part of Kotak Mahindra Bank's Group Management Council that drives and oversees the Kotak Mahindra Group's growth charter. He is a member of the advisory committee at NSE Clearing Limited. He is also the member of Secondary Market Advisory Committee at SEBI. On the personal front, he has interest in reading, traveling, cycling, and is also very passionate about cricket. Today, as we all are going through tough times during this pandemic, Mr. Jaideep Hansraj will speak about his take on Indian economy and Indian financial sector in specific. Tough times don't last, but tough people do. Over to you, Prashant Bhai, for the talk with Mr. Jaideep Hansraj.
Good morning and welcome to all of you, and a very, very warm welcome to Jaideep for coming on to Drshtikon and sharing his views. Jaideep, you can start your video so we can start with our talk. Yeah, Jaideep, hi, welcome on this on Drshtikon.
Thank you very much, Prashant. Hello, friends. A very warm welcome to you, and thank you so much for taking time out on a lazy Sunday morning to listen to an old, boring banker and broker.
I think bankers and share brokers can never be boring. That's where all the excitement is. That's where all the money is. And now the OTT channels are also talking about it with the Harshad Mehta thing, with the bad boy billionaires thing. So, when we spoke for you to come on Drshtikon, and you told us of your title, India BC, DC, AC. Very intriguing title, very enigmatic. Would you care to expand on that, what BC, DC, AC stands for?
Yeah, unless people get dirty ideas, the topic is BC is before COVID, DC is during COVID, and AC is after COVID. And it's been one of the craziest 8 months now, or slightly more than 8 months now, that we've been in the heart of COVID. I personally am a COVID survivor. So I have that much more to add on how bad this thing is. But yes, the BCDCAC is an acronym for before COVID, during COVID, and after COVID. And as we're going through the DC period currently, I thought I'll maybe delve into what actually went through before COVID, or what were the critical developments before COVID, what are we seeing during COVID, and take a punt at what can or might happen after COVID.
So, are we still in the DC period, as in during COVID period, or are we seeing the end of the DC period now? As far as
No, I
the
think
finance sector is concerned, of course.
no. Clearly, we clearly are in the DC period, and I'd maybe shift slight focus and take us to the before COVID zone of where the country was looking at, where the economy was looking at, and how the financial sector was doing, and then maybe come on to the during COVID period as we stand just now. I'll actually break up the before COVID or look at the before COVID period from September of 2019 to maybe March of 2020, when the crisis hit us and the markets crashed the way they did, and what have you. So if you look at, I'll actually go to September of 2019, when in my mind, the biggest financial reform was unleashed on corporate India by Madam Finance Minister, which was, I think, on 22nd or 23rd of September, when tax rates for corporate India were cut to 25%. Now, that to me, friends, is one of the biggest reforms which could have been given to corporate India. I mean, imagine if a company is making 1,000 crores of profit before tax. It was earning 650 crores of after-tax profits. And suddenly, you are now making 750 crores of after-tax profits, which means a company has straight away made 100 crores of incremental cash flows just overnight. And 100 crores of cash flows is big money if you're talking of 1,000 crore before tax company. What I think the government took a call on is that with this incremental money of 100 crores, or whatever that amount is, each corporation would, they thought, spend a lot of money on capex. And if capex happens, which means you will create theoretically a lot of employment. Now, as things started progressing, and one very quickly realized somewhere around December, January, that the Indian growth rates for Q2 and Q3 of 2020, which is 2019, 2020, wasn't growing all that much. And I think corporate India took a call that this is not the time for going aggressive on capital expenditure. The thumb rule which I've seen corporate India follow, having interacted with a few corporate leaders, is that only when you've reached a capacity of 80, 82, 85%, do people look at fresh capex. And corporate India capex capacity at that point of time in November, December of 2019 would have been at about 60, 65%. So the call which the government took, that with this incremental money which is being doled out to corporate India, they will spend on capex, turned out that corporate India was not in a position to do capex. And when it wasn't in a position to do capex, or large portions of India weren't able to do capex, you had the economy even getting further into a slide. And that was the before COVID period, which I would talk about, because you had growth rates going, I think, below 6% kind of levels. You had inflation at reasonably decent numbers, etc. And that was the before COVID zone, where India, or India Inc., as I call it, or the Indian economy, was slightly uncomfortable with the growth rates and uh, was in a slightly bad zone. And then this thing called COVID hit us. Uh, I don't think anyone uh, realized or still realizes. I think still realizes is the wrong way to put it, but I don't think anyone during that March period realized the criticality of this animal called COVID. Uh, and the classic dilemma which government, not only the Indian government, but all governments across the world were struggling with is that should I save lives or should I save livelihood? And as is the case, which all of you would be aware, that in the early part of the DC period, as I call it, which is the during COVID period, as I call it, uh, the entire government was on trying to save lives. What did it do? It put lockdowns in place in severity from the 23rd March or 24th March timelines. What it expected or what it wanted to do in the first 2-3 months of the DC period is that they felt that if I shut down India, whoever has COVID will get out of COVID in 2 weeks, 3 weeks, 4 weeks. And if no one is going out of the house, then how on earth can anyone else get COVID? What I think the government didn't envisage was that the people who were in urban India and had to go back to rural India didn't know how to go back to rural India. And when they started going back to rural India or to their villages or their homes or the tier 2, tier 3 towns where they came from, is when the COVID just exploded or the virus just exploded. Because I'm sure you've seen photographs, I'm sure you've seen videos of people who've been going back from the Bombays and the Delhis and the Kolkatas and the Ahmedabads of the world to their hometown. No one could really stop COVID from spreading. And that period of, I'd say, March 20 to July 20 or April 20 to July 20 is when we were really in shambles. Growth rates were falling as if there was no tomorrow. I mean, the April to June quarter, the GDP numbers had, if I'm not mistaken, a fall of some 22, 23%, which is unprecedented again. And uh, people were just scared. I mean, did not knowing what to do. And then comes the second half of DC, or the half which we are currently in, which is from, let's say, I'd say from August of 2020 to November of 2020 or December of 2020, as we currently are, where people started shrugging off the issues of lives versus livelihood and said that if I don't have livelihood, anyway, lives are going to go. And people took this call of saying that let's get back to work. Uh, because if I don't work, then anyway, we are in trouble and everyone's going to die anyway. And then one saw growth rates coming back. One saw growth rates coming back with Indian Indians going back to work. It was pretty obvious that there will be uh, growth rates happening in the corporations which they're part of. And even the government, whether it was the state government or the central government, took a position, I think, of saying that I will, if I don't support livelihood, I will be in trouble anyway. And the growth rate for quarter two still slipped, but to a much more healthier level of a 7% GDP drop or a 7.5% GDP drop than the precarious 23-24% GDP drop which happened in the first quarter. I think the biggest achievement during the DC period, as I call it, is, or I'd say the two biggest things during the DC period, as I call it. One is that I think geography became history. I'll tell you what I mean by geography becoming history. And this is a phrase coined by Uday, and we've been using it a lot in the last 2-3 months. It does not matter whether you are in Bombay or Hyderabad or Delhi or Kanpur, you can be serving a customer in any part of the world, which means it did not matter whether you were part of rural India or you were part of urban India. You could service a customer in Boston, you could service a customer in London, you could service a customer in Hong Kong. Similarly, if you were even staying in Ranchi, you could service a customer in Dubai or Bombay for that matter. And geography just became history because there was no logic that you necessarily needed to be in a particular office to work. And I think this will continue for a very long period. I don't see this coming off, or geography becoming history coming off, and that too for a very long period. The second thing, and I've said this very, very often, that technology and digital have been the biggest beneficiaries of COVID ever. What changes corporate India did not make in their digital and infrastructure and technology issues for years, they actually completed that work in a few months. I myself, in our organization, the kind of progress which we've made on technology and digital in the last 6 months, I don't think we've done that in the last 5 years. And I think one of the biggest beneficiaries, as I said, for corporate India has been the digitization of corporate India. I think it will continue like this for quite some time. And I wish I had a crystal ball. I don't know when the after COVID period is going to start. I think it should be about 6 to 9 months from now, which is the closer to the third quarter of calendar 21 is when I think we will be in the after COVID zone. And as I said, that I wish I had a crystal ball, or I don't have a crystal ball to project what I think will happen, but I'll take a few shots at what might be the situation going forward. I think the big will become bigger. I think the organized sector will become far, far bigger than what they've ever been. I think consolidation of Indian enterprises is something which one is going to see in a very, very big way happening over the next maybe 6 to 8 quarters of starting from whatever the next 3 to 6 months. And I'll keep repeating this, that the big will become bigger because they have the ability today to attract talent. They have the ability to spend on infrastructure. They have the ability to spend on technology, which too many people today, I think, are not in a position to. And I think organizations which become leaner and hungry for business are the ones which are going to succeed. The work from home concept, I think, is going to become even more prevalent. And I think this work from anywhere concept is going to come about, which is WFA, is going to come with a lot of focus. I think a lot of corporations worldwide will allow people to work from home or work from anywhere for that matter. Uh, I'll actually, during the course of the conversation, I'll come to maybe, I'm sure everyone would want to get a shot at what we think are the sectors which will do well as things go forward. I'll come to that during the latter half of the conversation. But I just like to end this piece by saying that on hindsight, uh, it is said that everything is 2020. I just hope that the phrase hindsight is 2020 gets changed, because I don't think I want to look at 2020 ever again. And we've got 25 days left for 2020. I just hope it gets over faster than we can say Santa Claus.
Interesting inputs there, Jaideep. A couple of things on what you said, that we'll start soon having a work from anywhere concept. I guess one of those management gurus, was it Peter Drucker, who said management by walking around? So those things are going to go out of the window now.
Correct. Yeah, that's right. That's right.
So, and on the growth path that you were talking of, that you're expecting a growth in the third quarter of 2021. I think in the recent report that RBI has released, they are expecting a V-shaped recovery. And not only a V-shaped recovery, they're saying that the recovery will be at a threefold speed. So do you think that kind of a recovery is actually possible, that faster recovery?
Prashant, I think it's possible. I think it's possible. If you saw the talk of the finance minister a few days back, then the RBI governor, was it yesterday? I think it was yesterday. Or various people from the ministry uh, clearly believe that we're looking at a decent enough growth rate. Now, I'll actually link it with interest rates, because with such low interest rates in the Indian scenario and such low interest rates globally, I think we are in a situation, or we are in a position today, that growth will happen. Because let's look at it from an India perspective. And I was actually jotting down certain points which I thought I should try highlighting today. You've got external India in one of the best situations possible. You've got forex reserves of about $550 billion or $560 billion. I don't know the exact number. You've got oil prices which are at more or less very low levels. Of course, the consumer is still paying for a lot of it, but government is making up a crazy amount of it through taxes. So oil prices are low, which is very good for our country. And gold imports have come down dramatically over the last year and a half. Now, these things are very good for India. The not so good thing for India is the fact that if you have a fiscal deficit, don't hold me to that number. If you have a fiscal deficit of between center and state, between 12 to 13%, borrowings for the center and state will go up. And that burden of interest is something which one should be bothered about. But again, coming back to your question on growth rates, whether it will happen or not, I would say till interest rates remain at these low levels, I think growth rates will happen. I mean, I'll give you a small example, and I uh, believe in this, that I think residential real estate, uh, what one has seen, the damage which one has seen for residential real estate in the last, I don't know, maybe 5-6 years, I think it's time that residential real estate will come up. I'll tell you the reasons why. One, you've got developers who are willing to drop prices, which they weren't willing to till a point of time. Second, you've got home loan rates at really crazy levels. I mean, Kotak Mahindra Bank is offering a home loan at 6.75%. Or sub 7 kind of interest rates for home loans is something which one has not seen for a very, I mean, I don't think I remember in my 30-year career, I don't think I've seen these kind of rates ever. In Mumbai, and I don't know the situation in the other states, stamp duty has been reduced from 5% to 2% till 31st December, then to 3% till I think 31st March. So it's again an attractive timeline for people to go and buy houses. And it is now ready delivery, as I was saying. So if stock or inventory of the builders actually gets exhausted, then they will do fresh construction. And if they're going to do fresh construction, the demand for whether it's steel, whether it's cement, whether it's other things will keep going up. And the biggest thing, I think employment will rise. And if you have this situation, then you really are seeing at a decent growth happening in the Indian economy.
So you think we'll still be on the path to attain a $5 trillion economy by, say, 2025?
2025 is tough, Prashant. I'll tell you my Ghoda Ganit, as I call it, or thumb rule maths, as I call it. I call it the rule of 72, which means that for money, if the interest rate is 10% per annum, 72 divided by 10, which is 7.2, it should take 7.2 years for your money to double. That is what I call as Ghoda Ganit rule of 72. Let's look at the Indian economy. Indian economy is currently at about 2.5, $2.6 trillion, give or take whatever, maybe 2-3% here or there. If the Indian GDP comes back to about 6.5% next year onwards, and you have nominal inflation, and you have inflation of say 3.5%, which means you're looking at a nominal growth rate for corporate India, or for India Inc., as I call it, of 6.5 plus 3.5, which is 9 to 10%. Now, if you have growth rate of the country at 9 to 10%, which means for the economy to double by the same thing which I was saying, the rule of 72, 72 divided by 9 is 8, 72 divided by 10 is 7.2, which means anything between 7 to 8 years is where the GDP should double. Which means if you're looking at $2.5, $2.6 trillion today, 7 to 7.5 years kind of a benchmark is what I would say would take for a $5 trillion economy. But I'm really not so much worried, Prashant, whether it happens in 2025, it happens in 2027. As long as we are on that track of a growth rate at a sustainable growth rate of 6.5% kind of levels, which is not easy. Let me assure you. Let me give you my point. I don't think it's easy, but I think we'll get there. And if we do get there, then, as I said, whether 2025 में 5 trillion हुआ या 2027 में 5 trillion हुआ, doesn't really matter. And I would have retired by then, but another correlation which is there to the 5 trillion, which is equally interesting to me as an individual, and as I'm sure it's interesting to everyone on the call, is that the market cap to GDP generally works at 0.8 to 1.5 times GDP, which means that today the GDP is 2.5 or 2.6 trillion dollars, and the market cap of India as of yesterday, I again checked the numbers last night, it was 2.27 trillion dollars or something like that, which means you're trading at about 0.9 times GDP. So if you have a situation where the markets would be at 0.8 to 1.5 times GDP, you could actually see the market cap of India being between 4 to 7.5 trillion dollars. And if you have a market cap of India at 4 to 7 trillion dollars, then we can all party for a reasonably long period in our lives.
So, if you're that bullish, does that mean that whatever funds I may have free, or whatever liquid funds one may have free at the moment, you need to invest the whole thing in equity markets?
See, when you and I were having this conversation, Prashant, I told you that I've been I'd like to give a disclaimer, please. The views which I'm having here are clearly my personal views as Jaideep Hansraj, and does not speak of the views of either Kotak Securities, my organization, or Kotak Mahindra Group, at all. So these are my personal views. Yes, I'm a hardcore 100% equity guy. I mean, having said that, I'm not saying that everyone or should look at only equities as an asset class, but it's really going to depend on individual choices of where you want to be. And I'm sure I know Anand reasonably well. When Anand would have done the session a couple of weeks back or a month back, I'm sure he would have spoken on asset allocation, risk profile, etc., etc. I'm not going to get onto that, but it's really going to be individual dependent where he or she would want to have his money parked. But as I said, if the maths is like this, Prashant, uh, obviously equity is a compelling reason. To be in equity is a compelling reason. Now, uh, I wouldn't know that, and I have every time I've been, I end up getting a black tongue syndrome. So it's better that I stay away from predicting the markets. But you could, the probability of a 20% fall in markets, I think, is low. But yeah, 8-10% गिर सकता है, मुझे नहीं मालूम. I wish
So
I
let's say
knew.
if one had to invest in the equity markets and bet on the equity markets, what's the time frame with which you should be betting on at the moment if you were to enter with some fresh investment in the markets?
No, I'll give you the normal traditional answer, which I would, at least look at equities for 3 to 5 years and stay invested. I've, though I happen to run a broking firm, but I never encourage trading. Money is only going to be made if you buy and hold. And even 3 to 5 years, mujhe nahi malum. I mean, why not 15 years? Just hold it. If there are companies which you can think of, which are with sustainable cash flows and with, again, interest rates at these ridiculously low levels, the discounting of those cash flows to come to the net present value is going to get better and better and better. And that's why markets are behaving the way they are. I mean, today risk-free rate in India is 4%, which is what the RBI interbank rate is. The same rate globally is 0. So till rates are at these levels, I think one should look at being in equities as an asset class. Not be traders. Just buy and hold. I mean, I'll give you a. Actually, I don't know whether I have time to give you that example, but it's one of the most telling examples. Do I have time? Do you want to
Yeah,
listen to
please,
this
please.
example for about 3-4? Okay,
We would like to.
I'll tell you of this lady. I know this lady extremely well. She's currently about 75 years old. Okay. She was in a family which consisted of 3 sisters and 3 brothers. Okay. The family was extremely well off, and the sons were not given anything by the mother, by this lady's mother, because they were running businesses, and 3 different businesses, as I said, very. So the mother decided to give 3 things to the 3 daughters. To one daughter, she gave a village in Kutch. Okay, a village in Kutch.
Wow, that's huge.
To one daughter, she gave a large 4-bedroom apartment in Carmichael Road. And to this lady, which I know, gave 1,000 shares of Colgate. And this was, I think, in 1975.
1,000 shares of
Colgate.
Colgate. Okay.
Yeah. That 1,000 shares of Colgate today is 432,000 shares of Colgate with no fresh monies added.
Okay.
And 432,000 shares of Colgate today at a price of 1,500 rupees, give or take, is valued at about 65 crore rupees.
Wow. And we are not even talking about what she would have earned through dividends and.
The dividend which came to her last year was about 65 lakh rupees. So the power of compounding, the power of equities, I don't think any other asset class apart from maybe real estate would have.
I can't agree with you more. We've heard so many stories of Infosys and people investing in Infosys when it started back way back in the 1980s, or people investing in Reliance then. And people talking of, yes, 100 share Reliance के या Infosys के मैंने बेटी की शादी के लिए रखे हुए हैं.
Correct.
Those kind of statements.
Correct, absolutely.
Probably all falling true in this manner. But then I guess the lady was lucky to have identified the right company to invest in.
No, she didn't. It was just handed over to her. I think it was the IPO time. The IPO of Colgate happened in 1977, I think, or 75. I'm not sure.
And those were the times when IPOs were at par, were always issued at par.
That's right. That's right.
Share price.
That's right.
The face value.
But it's also luck. It's also luck. It's a lot of it is luck. But someone has to have the conviction. And as I said, it's not easy. But I would urge everyone. I mean, I would urge people on this call with young children, people who started working just now, just go out and do your SIPs and do not touch them.
A fair piece of advice. So taking a leaf out of what you said in the first part of the session, that the big will grow bigger, is what you said. So now the government has announced a package of 2 lakh crores for MSMEs. And there is a lot of there is a lot of impetus on growth of MSMEs. Government has asked their armed forces to stop procurement of certain items from bigger companies, or stop importing those items and look at domestic companies. So do you think MSMEs also have a good chance for growth in the near future? Near future in the sense, let's take about 3 to 5 year scenario.
I'll put it this way, Prashant. I think the big play for us, whether it's for MSMEs, and of course, there's a huge focus which the government is putting on MSMEs. And I think rightly so, because those are really getting strapped for a lot of stupid reasons. I mean, the fact that they're not big sometimes does not allow them to get the requisite loans, sometimes not at the right rates at which they want to get it, etc., etc. But the government's, and specifically Mr. Modi's agenda of having Make in China or Made in China to become Make in India is, I think, a big move. Whether we succeed or not, only time is going to say. Whether we execute it well or not, only time will say. I hope and I pray that we execute it well. And if we have this shift of people not buying from China and looking at other alternatives, I think we've got an opportunity of a lifetime as a country. And specifically, the opportunity is there for MSMEs. I'm not saying it's not there for large corporates, whether it's in the capital market goods or whether it's in the whatever. But I think it's a huge opportunity, and I think the government is doing everything possible. Various regulators are doing everything possible to ensure that the small and medium enterprises really prosper.
Good to hear such optimistic words.
I think it's a massive opportunity. As I said, how well do we execute is purely up to us. But it's for us to lose, the way I put it.
So you think the Atmanirbhar program will actually work well for India?
Yeah, as I said, I hope so. I hope so. Though, in fact, even China now is actually, I was reading this editorial, I think it was Business Standard, or was it The Mint? I don't remember. Where actually the Chinese government is also starting something on this Atmanirbhar space for the Chinese economy, because they are seeing problems happen for them or for their companies from a export point of view.
So how do you think it's faring in China, the growth in demand for the Chinese goods?
Actually, it's they've been showing decent growth rates, and of course, the one big advantage for them was that COVID for them in the last 6 to 8 months has not been so much of an issue. I mean, that number has been static at that 80,000 or 90,000 number for a very, very long time. It was 80,000, I think, when India started showing COVID cases. And I
Do you
think it's
believe in
still
those
in that.
numbers?
Yeah, this is a public forum, so I don't know.
Yeah, actually, when you're talking of China, China's been having a really good trade, a lot of industrial production, and a lot of exports, thanks to their currency being probably undervalued. And the Reserve Bank of China, or the People's Bank of China, is making sure that no stone is unturned in keeping that value low, so that they have a good share in the exports that they do. But do you think the Chinese banking system is robust enough to handle it for a longer time?
See, again, I think if you look at reserves, see, one can only talk of published data there, or whatever is the published data. From whatever is the published data, whether it's GDP numbers, whether it's FX reserves, whether it's fiscal deficits, whether it's surpluses, not deficits there, surpluses, the numbers are astounding. So, as I said, I don't see a reason for China, banks or financial system or the government to be worried. Uh,
But
Actually, I had a geopolitical view on this, but maybe some other time.
but do you think it's possible for India to replicate such a scenario?
No, not as easy, because China comes in as a pure, uh, uh, you know, they obviously control the government there, or the leadership there controls everything about everything. So being a democracy as India is, uh, I don't think it's that easy. But having said that, again, my bullishness will come out on India Incorporated. I just think it's an extremely big opportunity for us as we talk. Uh, I think with the problems which are happening with other countries, with China, I think it's up to us to really make it happen, both from an Atmanirbhar point of view, as well as taking over some of the markets which China was catering to till some time ago.
So now, if you talk of the pre-COVID scenario, India was probably betting a lot on the infrastructure companies and maybe agri inputs and travel and tourism industry. And then COVID hit, changes the whole scenario, and suddenly you saw realize that telecom is having a good boom, or new sectors are opening up. So if you had to invest today, which are the sectors you would bet on for the next 3 to 5 years?
Uh, I'd clearly go for private sector banks, the financial services system. Uh, Private sector banks look good to me. The banks which we like there are Axis and ICICI. We like IT a lot. Infosys and HCL Technologies, good enough bets. Consumer, we like Levers, ITC, Britannia. We like in the capital goods space, we like L&T. Yeah, so these would be a few of the sectors and stocks which we have on our recommended list going forward.
And
But
sorry, continue, please.
yeah, I don't have stocks in these sectors which we've done, but we were actually interacting with a few companies. I've actually seen this, and I'm sure all of us there on the call who have interest towards capital markets or the economy in general would notice that the construction equipment sector is doing well, the road construction is doing well, mining is doing well, the tractor piece is doing well, passenger cars are doing well, cement is doing well. So you've suddenly got a situation where people are. I mean, there are companies or sectors which are showing reasonably decent growth rates. Uh, Passenger cars. I mean, people are not so comfortable with the Olas and the Ubers and the private taxis, and the public taxis, and don't mind buying their own cars. The disadvantage, and I'm sorry, I'm digressing slightly. The disadvantage is that as a bank, what we're seeing is that people are saving, even salaried class people are saving much more than before. Now, what does that mean? If I'm saving much more than before, which means I'm not spending much. If I'm not spending much, that expenditure which I'm not doing could have been someone else's business. And to me, that is, I don't know when that will stop. So maybe, and I don't have data on this, that maybe you and I are not going to restaurants anymore. Maybe you and I are not taking flights anymore. Maybe you and I are not taking holidays anymore. And that is the savings which is happening. Otherwise, no other form of saving is happening. But look at it this way, that if I'm not spending money, it is at the cost of someone, which means some business is suffering because I, as an individual, or you as an individual, or all of us as individuals, are not spending enough. And that is a.
But don't you think that's a temporary scenario? I mean,
I hope
something like COVID has never hit us before. And for most of the world, I mean, the last big health crisis that we would have seen was the bubonic plague, or we would have heard of is the bubonic plague somewhere in the 1920s. So other than the world wars and all which have come in, we've not seen a medical emergency like this come in for the last so many years.
Absolutely.
So people would tend to be a little safe, right, in the DC or during COVID times.
No, I don't blame anyone. I mean, absolutely not saying this to anyone.
So what I was driving towards is that once people see the light at the end of the day, or when the vaccine comes in, which people are forecasting 3 to 6 months from now or 9 months from now, would there not be a shift in their spending patterns?
That is what everyone is hoping for, Vishal. That is what everyone is hoping for. I mean, I know, I mean, I'm waiting to explode. I want to go out. I want to go to the movies. Tenet is released yesterday, day before yesterday. I want to go and see it, but I can't. Or I can, but I'm not going. So yes, I think everyone is waiting.
I guess when things are optimistic, people look at the moon, and when things are pessimistic, they are always staring at the depth, and you never realize when the shift actually takes place.
Yeah, absolutely.
So let me also pick up a few questions from our audience. We have a question from Suresh Bhai Parekh. He wants to know that as a person having huge experience of dealing with the corporate India and the Kotak Group, do you believe that ethical corporates who are not crony capitalists will be able to grow as well and as substantially contribute to inducing income inequality and job creation?
Suresh Bhai, I have very strong views on this. I think only corporations which have ethics, morals will do well on a sustained period of time. You could have companies which are shady, which might do well for shorter periods of time, etc., etc. But for sustainable growth to happen in any corporation, there is no compromise to ethics and corporate governance. That is, to me, the number 1, 2, 3, 4, 5 most important things which should exist in a corporation. Without that, not going to happen. And if they become big, then they will employ more and more and more people. I'll give you an example. I was reading about this a couple of days back. During the COVID time, and it doesn't have so much of connection to what question Suresh has asked, but one organization, which is Amazon, has employed 430,000 people in the last 6 months. Fresh employment given to 430,000 people, one firm.
That's a huge number.
That's a huge number. 4.5 lakh maru ke naukri.
And Amazon is opening up a new data center in Hyderabad over a huge area. So imagine the kind of potential they are seeing in India, and imagine the kind of jobs creation that they are looking for in India.
Yeah, absolutely.
But while all this is about India, We have a question from Kaushik Bhai Sampat, who asks, how do you see other countries other than China, like Taiwan, Philippines, or Bangladesh, contributing with India or rather competing with India as a manufacturing hub and to figure as a supply chain for the rest of the world? Do you think they would have a better edge than what we have?
I'm scared about this as a hardcore Indian. I'm scared. I'll tell you what is bothering me, and I hope I'm wrong. I obviously don't have data to. I have some bit of data, but that's not enough for sufficient data. Uh, where I mentioned in the earlier part of the conversation that uh, made in China can become made in India. Made in China can also become made in Vietnam, can also become made in Bangladesh, can also become made in Taiwan. And if we don't get our act right of giving enough impetus to small and medium enterprises for exports, for uh, interest rates, for setting up factories, corporations fast enough and good enough, then I think we will lose out. So to answer your question, Kaushik, I think the potential for these countries which you mentioned, whether it's Vietnam, Taiwan, Bangladesh, etc., is as much, or maybe not as much as India, but it is tremendously there. And it's now going to be the survival of the fittest. Whichever company or country is going to be in a position to grab business from these places is going to be the winner.
So
So the opportunity, I think, is equal for all countries.
we have to bet on the enterprising nature of the Indian entrepreneur to
Yes,
make it right there on the top.
that's right.
So
Absolutely.
while you were speaking of India sitting on huge amounts of foreign reserves, in recent times, I think a lot of foreign currency has come into the Indian economy. Though not so much has come into greenfield ventures, most of them have been into brownfield ventures where they've invested in Reliance Jio or some other companies which are already there on track. So do you think this bodes well for the country for the near future? What I meant
Uh,
is, let me rephrase it a bit, that you think the investment that is coming in brownfield ventures, will that contribute to the growth, or would we rather have money coming in into greenfield ventures in India?
No, I'm okay with any kind of money coming in into our country. I would clearly say, believe that any kind of money coming into our country is good. The longer term money is obviously better than the portfolio money. Unfortunately, a lot of money which is coming is portfolio money, which has the ability to run away if the people so desire. Uh, but I'll put it this way. Again, I go back to my favorite topic of interest rates. I'd mentioned earlier that in US and developed markets, the risk-free rate is zero. And if the risk-free rate is zero, then you will have that money chasing growth. Because for them, the risk-free rate is zero. I mean, even if they get 1% return, is good for them. They're making infinite return. So if something is offering them high single-digit numbers or mid-teen numbers or something like that, it's great for them. So I think till the I'd request people to follow a couple of things very carefully. Keep a track on the dollar index. The dollar index currently is 90.5. If you see the dollar index at these 90, 92 levels, it is damn good for, sorry for the language, it is very good for uh, emerging markets and specifically India. If you see oil prices sustained at these levels, it is great for our country. And I would say that keep a track on these two numbers. And I think if you keep a track on these two numbers, you'd be reasonably sure whether FI money is going to continue flowing or not going to continue flowing. And keep a track on US interest rates. That US interest rates at, as I said, risk-free rate zero. They are hungry to put money. I mean, I, I was trying to find this quote of Bernanke post the Lehman crisis, where he said, helicopter funding is going to happen. As I said, I don't know the exact phrase. I'll look for it and maybe WhatsApp it to you. That during that QE1, QE2, QE3, whatever you had, people were throwing money as if from helicopters. What is happening just now is multiple jets throwing money all over the world. So the amount of liquidity which is there in the world is not funny. And that is clearly fueling asset prices.
So there's a lot of money in the economy, but people are worried to spend. And companies are presently a little shaken or a little uncertain to expand. So all that money is going to be idle for a long time, which means are we looking at a lot of inflation taking place just because there's so much of money in hand of people?
I think inflation will go up marginally, but I don't think it's something which we should be worried about. I think we should live with a higher inflation as long as we get higher growth.
And with the foreign funds coming into India, what are the productive sectors you think these funds should get channelized into to have better growth for the Indian economy?
Sorry, I missed that question, Prashant.
No, I'm saying with so many foreign funds coming into India, I mean, not the ones which are coming into the stock markets because they tend to be a little fickle. I mean, they can go out at any time. But if foreign funds were to come into India in the manufacturing sector, which are the productive sectors you would bet on?
Oh, I would be, as I said, I'd be comfortable with anything coming into the sector. But where I see whether it's FDI coming in or people buying out corporations, etc., I think it's pretty mixed. I've seen deals happening in the pharmaceutical space, closer to your state of. There have been a lot of transactions which have happened in the pharma space where foreigners have taken stakes in companies. I've seen transactions happen in of course, in the telecom space and the retail space and the startup space. I think wherever foreign money is seeing growth, or wherever money is seeing growth, I think it's finding its way into that channel. And again, I mean, at 0% cost of capital for the Goras, it's like.
But you think things will change in US now with Biden coming in, or it'll continue this
question.
way?
I won't want to hazard a guess. I wouldn't know. I wouldn't know. I think it'll take some time for him to settle down as well. I mean, he's still, 45, 50 days away from being the president. He's still president-elect. But I don't think there'll be too much of changes. Thoda changes hoga. I don't think there'll be too much of it.
Now, if you consider the COVID figures or casualty due to COVID, India is like number 2. The US is, of course, number 1. India is number 2 with the rest of the countries.
Prashant, actually, I'd like to, we keep talking about we have the highest number of COVID cases or the second highest number of COVID cases. Actually, look at it this way. With a population of 140 crores, the fact that we are at sub 1 crore, I think is a great achievement. I mean, and with now active cases at 4 lakhs or something like that, if you total up the entire world, and do their same number versus the population and the number of COVID cases, you'll very strongly believe that India has done a damn good job. Because against 140 crores, now we are cynical also, and we don't want to believe or listen to a lot of the numbers which are said that nahi manage hota hai, ye hota hai, wo hota hai. But out of 140 crore population, if we are at 95, 97 lakhs, give or take, I seriously think that we've done a damn good job. When COVID started, I was so scared. I thought that we'd see a situation where maybe about 8 to 10 crore Indians would get infected. But thank God, touch wood, we've managed it well. God's been extremely kind towards us. And I think
I'm completely in sync with you. If you say if you see the deaths per million or infections per
absolutely,
million, then we are like way behind.
absolutely,
We are not in
absolutely,
the leading top 10 at all.
Absolutely. And people say that no, I don't believe these numbers. I mean, you can't fool around with. I mean, 1-2-5% इधर उधर हो सकता है. You can't fool around with in massive scales. I mean, this is at the end of it. I trust my country.
So India has managed this pretty well. I mean, for a country as diverse as India, and if I can say as unruly as India, managing it to this extent also is a great achievement.
Yeah, that's right.
And what do you think? What are the lessons corporate India has learned from the whole COVID thing? Other than, of course, geography is a new history. What else has?
I think you need to be resilient and you need to be sustainable. And there is no substitute for cash flows. When I say resilient, you need to be very, very subtle or very flexible to change track at very short notices. And if you see whichever companies have taken those fast decisions of experimenting or taking decisions to change track, etc., I think that is where corporations have done well. And I think that's a lesson that if you're resilient, if you're sustainable, if you're flexible, and the mother of it all, you only have to focus on or one of the biggest focus areas has to be technology and digital. Today, I don't think there's any hope for a company, irrespective whether it's in manufacturing, whether it's in retail, whether it's in financial services, non-financial services. I think technology is going to be the key driver for every bit of corporate India or any corporation for that matter.
Great. And now, what we've seen in the past is whenever new IT companies have come in, the ITES have always flourished. Now with the people going work from home and all that, and like TCS has announced for the next couple of years, or not couple of years, probably till the end of next year, you'll have a work from home kind of system, and they will want to cut down their office space to 1/3 and stuff like that. How do you see the ITES performing in the near future?
I think there's a great future for IT software and IT hardware. I mean, small example, very small example. We have 4 people in the house. We used to have only 1 laptop at home. Now we have 3 laptops at home. And that is the situation which is happening everywhere. If you're a follower of Dell's or Mike, you must see their numbers. Their numbers for the September quarter from non-hardware, the growth rates weren't all that much, but hardware growth rates were about 18 to 20%. So whether it's software or hardware, I'd say that I'd be pretty bullish on that sector. And as work from home becomes, or work from anywhere for that matter, becomes more and more prevalent, I think software companies, digital companies, analytical companies, data-driven companies, e-com companies will continue. Consumer goods, I don't think people are going to stop buying essentials. So consumer goods, I think will keep doing well. Where I see an issue is telecom. I mean, telecom has never had it so good. I mean, with the use of data, the use of data is just going berserk. And the areas which still bother me is aviation, hospitality, travel. Yeah.
So how long do you think these sectors will remain quiet or will remain down?
पता चल जाएगा हम लोग को. I mean, till you and I are going to do webinars sitting at home.
Right.
I think this will continue. Though I think now webinars are going to be a order of the day. I think Zoom is going to be an order of the day. So I think it's really going to. I don't know a time frame, but I think you will not get back to your pre-COVID days or your before COVID days. To give you a small analogy, what I think is maybe we were 30% technology and 70% physical in the before COVID zone. In the during COVID zone, we are exactly the ulta. We are 70% digital or 80% digital and 20% physical. I think somewhere it's going to be in the middle, as maybe in the next 6 to 9 months when this thing goes away.
I guess I can't agree with you more. Giving a very example closer to myself, I see my mother doing Zoom calls and Google Meets and Microsoft Teams and shuttling between these 3-4 different kind of video
Absolutely.
conferencing, and I say what change it has made to her. I mean, I see the kids doing it and the older generation. So I think everyone is now very used to doing these kind of calls. One would rather do the Zoom calls than go meet someone and come back unless it's absolutely necessary.
Absolutely.
How do you see the defense and the aerospace sectors coming up?
I hope we don't have to use it, but no, I think I don't have I don't have too much knowledge on this, but I think it should do all right. But I'm unfortunately not well tuned up on this.
We have a slightly hatke question.
Mm-hmm.
Do you think that emotional intelligence plays an important role in investing?
Of course.
People were cautious in March when markets hit an all-time low, and now people are gung-ho.
Of course.
Yeah.
The classic fear and greed. These are nothing else but emotions. I saw that question flash, and actually I think it's a very, very good question. I clearly think emotions play a very important role in decision making, stock markets, investments, any kind of.
So I guess let's hope that the emotions are positive, which means all factors leading to the stock markets or production or what have you will be positive, and we are looking at a really good growth in the near future. And let's hope India takes this opportunity and we emerge as a leading economy out of COVID. So nice talking to you, Jaideep. It was very nice to have your thoughts, the insights that you shared. And
I hope it was worth everyone's while, because as I said, Sunday lazy morning, listening to an old, boring, bald banker.
Are there any other kind of bankers? No, that was just for the lighter vein, but I'm sure all the people who have joined the call on Zoom or those who have seen it on YouTube would have highly benefited out of it. And there are a lot of takeaways that you gave about the 72 rule, which Goda Ganit, as you called it, that will stay in people's minds for a long time. The sectors that you were recommending or the sectors that you were bullish about. Also, the talk of geography being the new history. I think these are a lot of takeaways which people will have. So, thank you so much for spending your Sunday with us.
Thank you. It was a complete honor. Thank you for having me over. It was an absolute honor. Delighted if I could be of any kind of help in the future. Thank you very much. Thank you very much, Rajan, Sheetal. Thank you so much.
And we'll be troubling you a little bit more also, Jaideep, because we have people writing to us with questions even after the webinar, which we'll send you by email and you can reply and send them back to us.
I am very bad in these things, but I will definitely ensure that I do it.
That's okay. We are good at follow-up.
Thank you so much. Thank you so much.
That was Jaideep Hansraj of CEO and MD of Kotak Securities, sharing his views with us and sharing his Sunday with us. I hope all the people who have joined on the call have been able to get some feedback, get some good inputs from his views, and will have an excellent time investing in the markets as well. Meanwhile, let me tell you, our next session will be on the 20th of December, same time, 11 a.m. to 12 noon. And we would look forward to all of you joining in. Meanwhile, if you have any feedback or any questions, please do write into us at drshtikon.talks@gmail.com. That is drshtikon.talks, drshtikon.talks@gmail.com. We'd love to hear from you about the things that you liked, about the things that you didn't, or any recommendations that you may have for us. And today on the Zoom call, we had Jenny Paleja, Ayushi Saraya, and me, Prashant Morparia. Thank you, all of you. Have a good day. Have a good time. Thank you.
Bye-bye. Thank you very much and stay safe.